Hello and welcome to the CNBC TV 18 special. I'm Shireen Bhan. We're coming to you from North Block and we're in conversation with the Revenue Secretary, Tarun Bajaj. Mr. Bajaj, always a pleasure. Many thanks for joining us here on CNBC TV 18. It's great to be back in North Block after COVID and of course before it shuts down for the budget quarantine. So it's nice to be able to speak to you in person. This is your last 48 hours in office, Mr. Bajaj. So I want to touch upon a whole host of issues with you. Let me start by addressing the unfinished agenda. And I go back to an issue that you've very publicly spoken about. You've been vocal about it since the time of the budget presentation in early Feb this year. You said that the capital gains tax needs simplification. In fact, it needs change and tinkering. In light of the recommendations that have come in, the work that perhaps has already gone into looking at what needs changing, is this the right time? Is this the appropriate time to make those changes, which you have said need addressing, need intervention?
First of all, thank you for having me for your program. Yes, I said that, and I said that immediately after the last budget. Perhaps people were not expecting me to say something which was not there in the budget. But I said that because I wanted a conversation, a debate to go on for the whole year, so that we know the views of the stakeholders, the people who are going to be affected by any changes that may happen on the capital gains. But I would say I did not get the kind of response that I was expecting throughout the year. We had done some preparation. Now it will depend on the policy makers. I'm not involved in the budget making process, so it will depend on whether they want to bring it or they want to wait a little more, do more conversation and more discussions and debate on it. But yes, one thing is for sure, that our capital gains tax regime is very complicated. It needs simplification. I've said it earlier and I'm repeating it here, that we have various buckets under which we put all products. Financial also we put in different buckets, and then we charge different taxes on them as capital gains. Then we also have different time periods to decide short-term and long-term. Then in some cases we have indexation, in others we don't have indexation. So I think all this needs cleaning up, but whether the time is right now, the time maybe was yesterday, if I may say so. But whether it happens this year or not is something for us to see on the 1st of February.
Yes, we'll know on the 1st of February, but I want to understand from you, said you were expecting a conversation, a debate, but you didn't get the expected response. So what was the expectation and what are you disappointed with, if I could use that word?
I would say when I said that, I thought there'll be articles, there'll be conversation with the policy makers as to what should be done. But I didn't find so much of response to that, and I completely appreciate and understand why it didn't happen. There are conflicting interests in every body that you have, whether it's an association, an industry body. There'll be people who would be wanting, say for example, to bring a lower time zone for short-term and long-term for, say, real estate assets, while there would be others who would be saying no, debt assets should come. So there would be conflicting. So it becomes very difficult for you to say something on behalf of a group. So though we saw some articles and some responses individually by various players. In fact, recently, a few days ago, I saw something which actually said that equity is a market where nothing below 3 years should be counted as long-term. It should all be short-term and only 3 years and above. So I thought such like debates would happen, and then one can engage, one can understand. I personally feel till I was here, I didn't want to make any changes based on what my perception is, what my thinking is. The taxpayer, the people who operate in the stock market, people who operate in the bond market, who do real estate, the real estate players, they're all important players in the system. We should know what is affecting them, what is it that they want, and after all, this is taxes that we are talking about, and it can have an impact on the sale of the product. So we would like to know how it impacts each segment and then take a conscious call as to what should be done.
So, you know, I'm not preempting anything that the budget may or may not do, but from what I hear from you, it seems like there hasn't been enough preparation at this stage to warrant a change, to warrant that simplification, which you said is much needed, but perhaps the timing at this point in time is not appropriate.
You are reading something which I have not said, so I will not say what you are saying is correct. I don't know what's going to be there in the budget. And if you say that there has not been preparation, my team has actually worked very hard on this, and I have
So is your team of the view that 3 years is the appropriate holding
No.
period
That I
or
just
not?
gave you an example.
Yeah.
That I just gave you an example. There is no such intention to bring the equity to 3 years and something like that. That I just gave you an example of somebody actually coming out in the open and speaking, which will be very difficult for, say, the Capital Market Association or some group there to say something like that. But people here have done a lot of studies. You also know that there was an Akhilesh Ranjan
Yes.
committee report. There were earlier reports. They've also gone into this whole aspect, and also people from the private, means outside the government, were involved in it. They have given their recommendations. So it's not that it is not available. But I thought in this 1 year we'll have good fights outside in the media, and we'll get to know what's there in it, and maybe then take a call.
Well, you know,
That's the only disappointment that I was mentioning.
Okay.
But it doesn't mean that there is no work which has happened. A lot of work has happened. Some associations, some people have also given their recommendations and responses to
yes, they have. AMFI, CII, and many others have presented their recommendations. I want to address another issue which you have, of course, spoken about, and that is as far as GST slab convergence and rationalization is concerned. Given where we find ourselves today, would it be fair to say that we are still some distance away from any rationalization, rate rationalization, when I talk about slab convergence specifically? Because you're on the record to say the revenue neutral rate was in excess of 15%, 15.3%, and we're currently at about 11%, so there is a large gap and a large distance. In that context, do you believe that we're any closer to rate convergence?
I would also say things have changed a lot since I said that and what people were saying that. You recall your first interview with me where you said, will you cross 1 lakh crores? And I'll repeat it. Now you don't ask me that question.
Are you going to cross 1.6?
So you're going to be asking those kind of questions,
Yeah.
the 1.6, and maybe a few months down the lane you'll say, will you cross 2 lakhs? And so I'm saying that even with that 11.6, or it may have gone up to 11.8 or 11.9, the tax rate, we have been able to achieve 1,50,000. So we have tried other things through which better compliance and more formalization of the economy, trying to match figures that we have from direct taxes with indirect taxes with MCA. So we've been able to raise the tax revenues. So I won't say that the target of the policymaker is to reach a figure of 15.3%. That is something which was mentioned, that this is the kind of relief that was given in terms of what the revenues were coming earlier and what the tax rates on excise duty and sales tax or VAT were and what the GST is. So basically, that is what the message was, that was what the dialogue was. And as far as rationalization of slabs is concerned, if you see, it is not possible to reach a stage of 100 from zero. We will do that journey, and in that journey, we'll have ups and downs. So in the 45th and the 47th GST Council meeting, and even before that, we've been able to correct a lot of inverted duty structures of our taxes. We have also given up a lot of exemptions and also corrected another few things. We've also given some relief where it was due. So having said that, I think let's see how does GST move in the next 3 to 6 months, and then maybe the policymakers can decide what is it that they want to do with these slabs.
So what will the run rate now be? 1 lakh has been crossed. We're almost at 1.6. What should we be prepared for in terms of the monthly run rate, given the visibility that you currently have?
So what I would say, I think the average right now that we are achieving is about 1.49, somewhere around that, because April is a month where it's a good GST harvest that happens. So I think close to about 1.50 to thereabouts should be the run rate. But I would also put a caveat there that the GST will vary based on a month. It may not be so high in the month of May, June, July, but it will be high in the month of October, November, which are festival months. So it will keep changing that way, but year on year, we've had a good growth. We had a growth of 30% last year. We are having a growth of 23 to 25% this year. So if we've had these 2 years of such high growth, I think we have achieved a lot on GST, and the run rate, as you say, will be close to 1.5.
Okay.